Good weekend, all. Ira Epstein of Linn Associates with your metal market wrap-up. And this wrap-up is for Friday, the 19th of November, 2021. Now, I'm hard at work on my metal report. I was just about to finish it up today at around 1 o'clock. And you know what? I said to myself, why don't I wait? We're getting pretty wild action today in the market. Let's see the markets settle, finish the week up, and I'll knock out this report over the weekend for you. So the metal report's going to come out over the weekend. You'll be able to view it on the website under the word research when I publish it. I haven't published it yet. And you'll get an email if you're on our mailing list that is now ready for you to view. Is that fair enough? Okay. It's only up for 3 business days. I don't count the weekend as a business day. But after that, it's gone. It's free to my subscribers. It will be free to you if you haven't viewed a certain amount of them in the course of a 12-month period. Okay? After that, there's a minor fee. It's always going to be free to my subscribers. All right. So when we look, we saw the bonds and notes rally today. Just want to point something out. We saw the NASDAQ rally. We saw the dollar rally. This is COVID. You're looking at COVID at work in a big way. We know that we saw today that the House of Representatives, first thing in the morning, passed the Biden agenda bill. I don't know, he calls it Better America or Build America. It's got all kinds of names. Whatever. It's going to the Senate, and that bill that they sent from the House in the Senate, if it starts advancing through, is not going to stay looking the way it does. So they threw the kitchen sink in. They're going to take out an awful lot. Here's what you know. You know that the Congressional Budget Office said it does not pay for itself. Forget the newspapers that are pro-democratic. Pay attention to the nonpartisan body that just told you it doesn't pay for itself. So if you want to get a bill done, and if you get Joe Manchin and Ms. Sinema to come in and have any power to get it done, that bill's going to end up paying for itself, which means everything gets cut back. I don't know what everything means, so there's a lot to be done. I think Congress, when they get through with their Turkey Day holiday, they got to go back and work on the budget because we can't allow America not to pay its bills. Then that can be done. Forget Chuck Schumer saying to you, this is going to be done by Christmas. No, it isn't. It's that simple. No, it isn't. All right. Then President Biden. Where's Sleepy Joe? I'm using the Trump name. I'm laughing at it myself. With the nomination for our Fed chair. He said 4 days. Now, if my math serves me right, I guess he can say maybe that meant Saturday. I'm trying to figure out. I really thought today was the day after the close that he should have done that. But again, I don't know what he's thinking. I wonder, so as many do, who's going to be his pickets, Ms. Brainerd or Mr. Powell. I think the bigger footprint and handprint he puts on the market is the other open positions. I don't think he has to take Mr. Powell out of the position that he's got. I think he can do all that he wants with all the opening of positions, and that gives you the Biden Fed setup. That's how I'm viewing it. In the gold market, the pattern right now is bullish. We're at mid-month. You've got a pattern higher lows, higher highs. This is a monthly chart. You're over the 18-month moving average, and momentum is turned up. Bullish there, unless you take out 1744, and you can neutralize the bullishness if by the end of the month you close under the 1829 level. That would give you the trend up from the swing line, but the bias would be down if you're under that number. The next thing I look at is the weekly area chart. And this is just closing prices. So for the week, we were down nearly a percentage point, 0.93%, backing off, but nowhere near that all-important 1792 level. When I look at the weekly bar chart, we got up and we're getting a correction on it. The pattern is still bullish as you have higher lows, higher highs. That's still bullish as I read the chart. The setup is one where you've got the 18-week average over the 100, which is over the 200. Everything's bullish there with major support back 1781 to 92. So where's the resistance? Well, it's right here. This is why gold's having trouble right here. You're fighting at the upper Bollinger Band. You only stay over or under a Bollinger Band 5% of the time. Another way to look at it, if you count, it's rare that you get more than 5 consecutive weeks over it or under it as well, or daily charts, same thing. So it's not uncommon. You hit it, you back away. You've hit it. I wouldn't be surprised that you pull back a little bit here. You're overbought in the slow stochastic, not embedded. So you have an overbought market that's not even in the process of getting both numbers over the 80 level, that's over the upper Bollinger Band. That was a target, it's hit, it can afford to do a little bit of a pullback. The gold-silver ratio is just drifting right here on a weekly basis, stuck at the 18-week moving average of closes. Silver, overbought, higher lows, higher highs. Remember when we got down to the combination of the Bollinger Band and the 100-day average? I know what I said to you. I would have said it here too. Pros cover when you hit those Bollinger Bands. Were you embedded? No. Or were you? Now watch. Learn to work with what I teach in my Enhanced Bollinger Band course. Not embedded. Both numbers under 20. Both under 20. Both under 20. Now watch. You lose that, the odds favor you're going back to the 18-week moving average of closes. Kaboom. Market's fighting. What do you do when you get up to the first challenge of an upper Bollinger Band and you're overbought? The pros are waiting to take money off the table. It doesn't have to get there. There's also window envelopes. My subscribers see that on my weekly subscriber. I do this and 40 charts for them on a weekend using the weekly charts because a lot of people like the longer term trade. This is the way to do it off those. In the copper market, what a weird day and week. It was just strange. Copper was strong today. And for the week, though, it's down with an outside week down. So you have a pattern of lower highs, lower lows. You're over the 18-week average, so the bias is up and momentum's flat. This is a rough market to try to trade right now. In the platinum, you hit the upper Bollinger Band. What are you supposed to do the first time you hit it when you're not embedded? Need I say more? You know what it is. Out. And that's what you did. If we go back to last week, you hadn't hit it. You hit it this week. I'm looking for the correction. I'm getting it. 18-week average to the 100-week. I'm looking for support to develop there. Now we're at the dollar index, which is embedded. It's over the upper Bollinger Band. Let me tell you again. I teach that you never buy over an upper Bollinger Band. It's that simple. I don't care what it does. I don't care how bullish you'll hear about it. The odds of staying over this number, if you play or under it, and you're the one buying over it and selling under it, why not just drive down the freeway with your money out the window? You might get lucky every now and then, but I want to be the guy taking the other side of that time after time after time. So I'm looking for a pullback. I am not bearish. It's just ahead of itself. It can get corrected by the Bollinger Band going up and coming back down a little. Can it stay a couple of weeks over that? Sure. Remember, I teach it can stay up to 5 weeks in a row. So there's no reason to be bearish because it's over it. But it also means the way I teach charting, you're not a buyer when you're over that number. Got it? Those are the ways. They're pretty simple. Again, look on our website. You'll see Ira's research. It'll either be tomorrow or Sunday. If you got in there, you'll see the metal report as I put it up. You have a great weekend. I'm going to nurse this cough, and I will talk to you later.